Hey everyone, and welcome back to the channel. Today, we're diving into a company that's probably touching your paycheck, or at least your HR department, without you even realizing it. We're talking about Paychex Incorporated, ticker symbol PAYX, a cornerstone of the human capital management industry. Visual, Paychex logo. On-screen text, PAYX Human Capital Management. Think about everything involved in running a business with employees: payroll, taxes, benefits, HR compliance, even predicting who might leave. It's a massive, complex, and absolutely essential part of any company. Paychex helps small to medium-sized businesses, and increasingly larger ones, handle all of this with their integrated technology solutions. Visual, animated graphics showing payroll, HR, benefits, insurance, icons connected to a central Paychex icon. Section 1. How Paychex makes its money. The core business, visual, section title card. How Paychex earns. Paychex isn't just about cutting checks. They follow what they call a service beyond payroll strategy, designed to keep clients long-term by offering a stack of valuable services. They essentially have three main ways they bring in revenue. 1. Management solutions. The tech backbone, visual, icon for cloud software/SaaS. On-screen text. 73% of revenue management solutions. This is their biggest segment, making up about 73% of their total revenue. Think of it as their cloud-based software, Paychex Flex, which centralizes everything from payroll and tax services to HR administration and retirement plans. Once a business is on this system, it's really hard to switch because all their employee data and history are intertwined. This creates what we call high switching costs, keeping clients sticky. They make money here through recurring service fees, usually a base fee plus a small charge per employee. And get this, they're even introducing AI tools, like Paychex Retention Insights, which uses AI to predict which employees might be looking to leave. Super smart. 2. PO and insurance services. Big company benefits for small businesses. Visual, icon for group insurance/benefits. On-screen text. PO and insurance solutions. Next up is their PO model. That stands for Professional Employer Organization. Here, Paychex basically becomes the employer of record for tax and insurance purposes. Why is this cool? It lets small businesses leverage Paychex's massive scale to get group health insurance rates and 401k plans that they simply couldn't afford on their own. It's a huge win for small businesses trying to compete for talent. 3. Interest on client funds. The float, money visual, icon for interest rate/money growing. On-screen text. Interest on client funds. The float. Now, this is a super interesting and highly profitable part of their business. Paychex collects money from clients for payroll and tax obligations. They don't pay it out immediately. They hold on to it for a short period. This temporary pool of money is called the float. Paychex invests these funds in safe, short-term securities, and the interest they earn on it is almost pure profit. In a rising interest rate environment, like we've seen recently, this segment can be a massive boost to their bottom line. They're expecting around $190 to $200 million from this in fiscal 2026. Section 2. Paychex's growth story and a big acquisition visual, section title card. Growth and the Paycor acquisition. Over the last few years, Paychex has shown consistent growth. Their total revenue jumped from just over $4 billion in 2021 to $5.57 billion in fiscal year 2025. That's a solid upward trend. Visual, simple bar chart showing Paychex revenue growth 2021 to 2025. On-screen text, FY21, for $0.06 billion-FY25, $5.57 billion, A huge part of this recent growth story is their strategic acquisition of Paycor for $4.1 billion in 2025. This wasn't just another small add-on. It was a game changer. Paycor brought in talent management and HCM capabilities aimed at larger organizations, allowing Paychex to expand beyond its traditional small business roots and target the lucrative mid-market. While this big acquisition did cause a temporary dip in reported net income due to integration costs, their adjusted earnings per share still grew by 6%. So, they're digesting a big meal, but doing it effectively. Section 3. Paychex versus ADP. The battle for HR dominance, visual, section title card. PAYX versus ADP. When we talk about human capital management, you can't ignore the elephant in the room, automatic data processing, or ADP. These two are the titans of the industry, but they have different strategies. Visual. Split screen with Paychex logo on one side, ADP logo on the other. ADP is the undisputed global leader. They serve over 1.1 million clients across 140-plus countries and brought in a staggering $20.6 billion in revenue in 2025. They process payroll for 1 in 6 American workers. They're the global giant. Visual, on ADP's side. Global leader, $20.6 billion revenue, 1.1 M plus clients, 1 in 6 U.S. workers. Paychex, on the other hand, is a bit more focused. They primarily operate in the United States, generating about 99% of their revenue here. They serve around 800,000 clients and handle payroll for about 1 in 11 private sector workers in the U.S. While smaller, this focus allows them to be highly specialized in the complex U.S. regulatory environment, which is a big selling point for American SMBs. Visual, on Paychex side. U.S. focus, $5.57 billion revenue, 800K clients, 1 in 11 U.S. workers. But here's where Paychex really shines. Efficiency. Paychex is known as one of the most efficient operators in the industry. For fiscal 2025, Paychex boasted an adjusted operating margin of 42.5%. Compare that to ADP's 26%. That means Paychex converts a much larger portion of its revenue into profit, showing incredible discipline in cost management and the scalability of its platform. Visual, bar chart comparing operating margins. Paychex 42.5% versus ADP 26%. Section 4. Dividends and shareholder returns. Income play. Visual, section title card. Dividends and income. For income-focused investors, both these companies are strong dividend payers, but with different characteristics. Visual, split screen again, comparing dividend stats. ADP is a legendary dividend king, having increased its dividend for an incredible 51 consecutive years. That's consistency you can bank on, making it a low-volatility choice for long-term wealth preservation. Its current yield is around 2.66%, with a conservative payout ratio of about 59%, meaning they have plenty of room to keep growing that dividend. Visual, on ADP's side. Dividend king, 51 years, yield 2.66%, payout ratio 59%. Paychex is also a high-quality dividend payer, with 16 consecutive years of dividend increases, qualifying it as a dividend achiever. It often offers a significantly higher current yield, hovering around 4%. However, this comes with a much higher payout ratio, around 95%. This means Paychex is returning almost all of its earnings to shareholders, which is great for current income, but leaves less cash for future growth or as a safety buffer during tough times. Visual, on Paychex side. Dividend achiever, 16 years. Yield 4.07%. Payout ratio 95%. Section 5. The future and key risks. Visual, section title card. Future and risks. Looking ahead, Paychex's future is largely defined by two things. 1. Paycor integration and mid-market push. The goal is to seamlessly integrate Paycor's software, realize cost savings, and cross-sell services to a much larger target market. This could unlock significant growth. 2. AI-first strategy. Paychex is investing heavily in AI. They're using it to automate routine tasks like payroll, provide instant guidance on complex tax laws, and enhance predictive analytics for things like employee retention. They want to democratize enterprise-grade AI for all their clients. Visual icons for AI chip synergy/puzzle pieces. On-screen text. AI-first strategy. Paycor integration. However, every investment has risks. Economic slowdown. A big risk is a broad economic slowdown or job losses, which would directly hit their revenue. Interest rates. Since they rely on interest from client funds, a rapid drop in interest rates would impact a significant profit stream. Integration challenges. Merging two large companies, like Paychex and Paycor, is complex. Any hiccups could lead to client churn. Competition. New tech-first players and existing giants are all vying for market share. Section 6. Investment Outlook and Takeaways. Visual. Section Title Card. Investment Takeaways. So what's the takeaway? Both Paychex and ADP are high-quality companies, but they cater to different investor mandates. Visual. Split screen again for final comparison. If you're looking for a blue-chip value stock with global diversification, decades of proven dividend growth, and a conservative payout ratio, ADP is likely your go-to. It's for stability and long-term wealth preservation. Visual on ADP's side. Value play, global stability. Dividend king. If you're seeking a higher current income combined with potentially faster growth driven by strategic acquisitions and superior operational efficiency, Paychex offers an intriguing income/growth hybrid. It's a more direct play on the digital transformation of the U.S. labor market, but with a higher dividend payout ratio that requires a closer watch. Visual on Paychex side. Income/growth hybrid, U.S.-focused growth, high efficiency, higher yield. Ultimately, for strategic investors, a diversified position in both Paychex and ADP could offer broad exposure to the essential payroll and compliance sector, balancing the global stability of the market leader with the high-efficiency growth of the challenger. What are your thoughts on Paychex? Let us know in the comments below. Don't forget to like this video and subscribe for more financial insights. Thanks for watching, and we'll see you next time.